Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is twofold. We're going to talk about how to overcome losing streaks, right? I've been getting a lot of emails from people that have been struggling the last month or so. The market's been a little bit choppy, so we want to make sure that you guys are able to overcome those losing streaks. Why? Because every single person in the world goes through losing streaks from time to time. It's just part of trading. We're also going to review some charts which will help you overcome some of those losing streaks, because I've noticed some people are taking trades right into support or right into resistance, and it's just not a good approach to trading. So we're going to review about 7 or 8 charts so that you guys can better understand where you should be taking a trade versus where you shouldn't be taking a trade. And then we're going to talk a little bit about psychology with regard to overcoming losing streaks, because it's something that every trader will have happen to them at some point in their career. The question is, how do you respond to it? What do you do to get over it? And a big part of that is that 3-letter word called ego, E-G-O, okay? You have to kind of put that in the closet a little bit and focus on what is really, really, really important, okay? And I think it's a powerful lecture because of that. A lot of people, they're amplifying things when things go wrong. They're raising their risk when maybe you should be lowering your risk, okay? So they're doing all the things you shouldn't be doing, or the opposite of what you should be doing to get over those things, all right? So as always, guys, if you like this video, please click the like button, smash, hammer that subscribe button, and don't forget those click notifications. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is dissecting charts and overcoming losing streaks. So the reason I thought this would be a good topic for this week, guys, is I've been getting a lot of questions about certain stock symbols. And I don't mean like, hey, what's Microsoft doing or what's Tesla? I don't mean that in that respect. I mean a lot of questions about, what do you think of this chart, Jared? What do you think of this trade? And they've been just pretty far off base. So I want to kind of center you guys back up again and make sure we're looking at the right stuff. Okay, and some of these questions have come from pretty experienced traders in the chat room. Questions that, I guess what I'm trying to get at, questions I would not have expected. I would have thought, you know what, you've been around 2 years, 3 years, 1 year, you shouldn't be asking that question. And I'm not naming names, I'm just making the point that when things get tough, which is the other half of this, overcoming losing streaks, we tend to, I guess, not see things as clearly as we were seeing them, right? We start questioning ourselves, and you start looking at stuff that maybe you shouldn't be looking at. All right, so that's kind of what we're going to talk about today. We're going to talk about dissecting some charts, so that making sure you're looking at the right stuff when you're looking at charts, and then also overcoming losing streaks. There's about 3 or 4 slides, actually more like 5 slides at the end, that we're going to talk about overcoming losing streaks. And in a way, they kind of all tie in, right? They all come together because, well, when you don't have confidence, you tend to make a lot of mistakes, right? And it's no different than sports and things of that nature. You know, you start asking tons of questions. I always find it fascinating when you're on a winning streak, you're so quick to dispense advice to people, aren't you? Admit it, you are. When you're on a winning streak, you're like, oh yeah, you should try this. It's working for me, great. When you're on a losing streak, you're like, dude, I need help, man. Any advice you have at all? I mean, it's amazing the difference. Well, that's unacceptable. You should be relatively neutral most of the time with your attitude towards trading and how you approach this business. So, you know, we're not robots, but the goal is to be as robotic as possible. All right. But before we get into that, let's do When Will the Insanity Stop? This week's is going to be a little bit anticlimactic, but I have a good one for you after this, if that makes sense. You'll see. You'll see what I'm talking about. So I got this email from somebody, well, you can see it, March 31st. It was a few weeks back. I haven't used it in a while. But anyway, buddy of mine got into trading with GME craziness, and through some sort of crazy luck turned 2,000 into 30,000. You know, basically told him to stop, get an education if you're serious, blah, 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 blah. Well, now that person, couple weeks later, has taken 30,000 and turned it into 20,000. Okay, so they've already lost 33% of their account. And now they're in BB at 1250, and it's going to go to the moon, YOLO, blah, blah, blah. Well, We all know where BB is now. BB's down in the $8 range. I even checked yesterday. It's in that $8.50 range. So by this person's estimation, they're down to about 13 grand. Now, why am I showing you this? I'm showing it to you because, well, if you make money through luck, there's a very high likelihood you will lose that money through luck or lack thereof, meaning you didn't have the skill to make the money in the first place. So reversion to the mean will basically bring you back to where you should have been anyway, which is probably at $2,000. So this person will likely ride BB down to the point of pain and end up where they were. You know what I mean? So it's just another one of those when will the insanity stop episodes. I mean, to turn 2 grand into 30, it's just dumb luck. I mean, it really is. And guys, and this is a good thing, I suppose, but everybody I talk to wants to be a freaking trader these days. I mean, as you guys know my story, I had some plumbers over fixing an issue. 3 sets of plumbers. That's 6 people, okay? 6 guys that came over. Every one is like, oh, yeah, I'm into trading. What do you do? I'm into trading. They see your car. They see your house. What do you do? I'm into trading. Oh, can you teach me about trading? Everyone. Electrician comes over. I want to learn about trading. Landscapers come over. I want to learn about trading. All right? So it's cool they want to learn about trading, but you have to go about this the right way, right? You have to go about this properly. Does that make sense? So don't come in thinking you're going to get rich quick. And that ties directly to this GME AMC craze, all right? You're going to lose most of your money, but I want to go one more step, okay? I want to go one more step. YOLO! How's trading going without stop losses? I didn't want to put this email out there. I'm not going to put the email out there because it's sad. But unfortunately, we had talked about this stock the other day, and I didn't realize that, well, one of our own was in this thing without a stop loss. Okay, and we talked about it. We were joking about it. We were laughing about it. We were having some fun because, you know, we like to kind of shoot the shit when it comes to when will the insanity stop. Well, it wasn't fun for one person. I got an email, and again, I'm doing this person a service by not putting their email out there. But this is what I call account destruction. This is an unemployment trade. In fact, I think I'm going to name it. Okay, I'm going to call it a UT, an unemployment trade. Okay, this is what happens, okay, when you don't use stop losses. We've been down this road. I'm not going to lecture you over it. If you don't get it by now, then you're not going to get it, and you don't deserve to get it. You deserve to lose money if you don't get it by this point. So this person was in this, you know, high as a kite, if you know what I mean, riding all this thing up and doing really, you know, blah, 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 getting pretty lucky. Your stop loss should be on this blue line at $80. I mean, if you are a fool and you want to give it crazy amounts of room, maybe your stop loss is at $50, okay? But to not have a stop loss, it's just, I don't even have the words. I'm speechless, and I'm rarely speechless. I mean, it's mind-bending to me. Yes, this shit actually happens. This stock went from $97 to $12 in one day. Now, I know what you're going to say. Yeah, but it's so rare, Jared. It's like 1 in a million. Well, it's less than 1 in a million because there's only 4,000 or 5,000 stocks out there. Okay, so it's way less than that, by the way. And it does absolutely happen. Was it worth it? Really, ask yourself, was it worth it blowing up your entire trading account, basically 90% of your account? Was it worth it? Well, probably not. Okay? Yeah, they call them a black swan event, you know, because people think they never happen. Well, no, they happen. I mean, we just talked about it. What's that guy? Archipos, I can't remember the name of the fund. You know what I'm talking about. Lost $10, $20 billion. It absolutely happens. Okay? Live to fight another day. That's always, I'm not going to lecture you. Live to fight another day. Be smart enough to know that you don't know everything. Let me repeat it one more time because it's like genius level intellect when I say this. And yes, truly genius level intellect, that common sense thing. Be smart enough to know that you don't know everything. All right? It's the people that think they do, they're the ones that get screwed. And I wouldn't call it screwed because they did it to themselves. All right, let's move on. This is nastiness. And this just happened, what, 5 days ago? 4 days ago? It wasn't even that long ago. All right? You deserve everything you got on this. I hate saying that in public because I know somebody took some serious pain on this. You deserve every single thing you got. All right? All right, let's move on. Let's look at some trades. Because practice makes perfect. You know, we do a lot of lectures on a lot of topics. Okay, oh, double bottom retest. Oh, bottoming tails. Oh, you know, bar by bar analysis. Oh, let's talk about psychology. But every once in a while, we need to just dig into charts. We just need to look at some charts and dissect them a little bit and go, you know what? What's happening here? And what were you thinking when you looked at this? And just to give you an example of what we're doing, there's about 5 charts here, and I believe 4 of them, one of them's my own, 4 of them came from chat room members' questions. All right, these are questions that you guys asked me about certain charts, whether it was through email, whether it was in the chat room, etc. And believe me, I could have put a lot more in here. All right, so this is the one that isn't. Okay, this is the one that isn't from you guys. All right, so we've done this before. We've looked at this before. In some ways, this particular chart's a review. You've never seen this chart. I haven't put this chart out there before, but we've seen similar charts. So you see a stock that's downtrending, okay? And then it has a big gap down, bottoming tail, moves up on a wide range green bar, chop, 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 pulls back. Big bottoming tail, rips. Now, this is where I want to talk about it. So over here on the left, you're just in a downtrend. Fine, right? Over here, you're thinking maybe a sell setup, but we have a square top, and we all know that taking sell setups from square tops is, well, generally not a good idea, okay? Wide range red bar comes in, little doji bar topping tail comes in, but then this happens. You get a wide range bar with a bottoming tail at a prior or near a prior pivot low with not a huge volume spike, but definitely a volume spike. Again, not like this spike over here, but a volume spike. This should tell you a lot. Now, why am I spending time on this particular bottoming tail and this double bottom retest? Well, I'm spending time on it because it's going to tell you what you can and can't do with this sell setup. I'll repeat it. This bottoming tail retest is going to tell you what you can and can't do if and when there happens to be a sell setup. Well, now we have higher low, higher low, higher low, changing a color bar, topping tail, and you could make an argument, that's about a 75% retracement, I guess. And some people might go, ooh, that looks like a good sell setup. How do I know this? Because you guys ask these types of questions in the room all of the time. This is not a good sell setup because of this bottoming tail on the retest, right? So what typically happens, and I want to be clear about this because I think sometimes you guys give me more credit than I deserve, which is fine, you know, because my wife doesn't, so I need to get that reassurance from you guys. On a serious note, right? A lot of times you guys will ask me about a sell setup, and I tell you these words. These are the words I tell you. It probably pulls back about 50%, and then it's going to pivot and go higher. I mean, I say that at least once a day. Yeah, I understand what you're looking at. I get the topping tail. It probably pulls back about 50% and then pivots and goes higher. I do it on the long side. Yeah, it probably bounces about 50% of the way and then pivots and goes lower. Okay? So what would that mean here? That would mean basically this stock triggers here, goes down to about where my cursor is, right there, okay, right in the middle of the range, and then pivots and goes back up. And then when it happens, 90% of the time, because I'm not always right, you're like, how did you know that? Like, do you have a magic crystal ball? No. You're just reading what happened before the sell setup. And in this case, that bottoming tail is so big at exactly the right area. And look at the potency of this bounce with the volume of this wide range green bar. So most, not all, most of the people who wanted to get out of this stock, sellers, they got out on this bar up here. They got out, right? Buyers start to push it higher, short coverers start to push it higher, and then it retests that area. Well, it bounced crazy last time on huge volume last time, and now you leave another massive bottoming tail. Rips. So when you see something like this and then it puts in a sell setup, you can't take it. You can't. And the problem is every once in a while, 1 or 2 of these out of 10 will work, and it reconfirms bad information. Okay, most of the time these will pull back 20, 30, 50% and then bounce and go higher. Okay, now that we've gotten this sell setup out of the way, we move up, we break the prior pivot high here. That's a good sign. It's what you kind of want to see after a double bottom, right? You see a double bottom retest, bottom retest, you want to see 2 things happen, right? I don't have it on the chart here. You want to see the trend line be broken, which would be right around where this blue line is. It would be right about there. The trend line would be here. The declining moving average would likely be right about there as well. So you want to see 3 things happen. You want to see the moving average broken, you want to see the trend line broken, and you want to see a higher high. Right? We've talked about that before in previous lectures. I'm just reiterating this. Higher high, trend line break, moving average break. Well, it does all three. Puts in a higher high, breaks trend line and moving average. Then what do you want to see? After it does those three things, what do we want to see? A higher low. You want to see it pull back and put in a higher low. Exactly, Luke. Perfect. You don't want to see it go 100%, 110% and retest the low, because that would what? That would make us question what we were thinking. We're thinking here after this double bottom, this stock has strength and it's transitioning back up from a double bottom stage 4 retest and failure back into a stage 2. Well, if we put in a lower low over here, well, it would make us re-question and rethink everything. Well, thankfully, it doesn't do that, and it puts in a higher low with a bottoming tail and a change of color bar. Lower high, lower high, lower high, lower high, bottoming tail. Boom. Yes. The answer is yes. Good buy setup, yes. Okay. Buy it. Now the stock moves up pretty handsomely, right? Big wide range bars. Okay. Really nice area where this thing. Now remember, technically speaking, you're not in an uptrend on this bicep. You're in a transition between the stage 1 and the stage 2. You're in between that. But that doesn't mean you can't buy it. You can buy it. It's a transitionary buy setup, right? So huge move. Now we have a question. So slight, ever so slight lower low, right? Sorry, lower high. Lower high, lower high, lower high. Well, by definition, 2 or more lower highs in an uptrend, it's a buy setup. Should we add? Should we add on this buy setup? That's the $64,000 question. What do you guys think? Yes or no? Should we add on this buy setup right here? Where this blue line is, right there, right above this red bar, right there, should we add? It's tough, isn't it? It's tough. This is why I put it there, because I was looking at this chart yesterday, and I'm like, what would I do if I was in this from down here, right? You imagine you took the original buy setup, you sold some shares because, well, it moved up pretty nicely. Would we add here? And let me tell you the reasons for and against. Well, the pullback is right at support, right? We could put a line right here. In fact, let's do that just for fun, okay? We could put a line right there. So you look at that and you're like, okay, that is pulling back to the right area, okay? Again, treat it like you're going through your checklist, okay? So 50% retracement, pretty close, right? High here, low here, that's pretty close to a 50% retracement. It's sitting right on support. That's good. My guess, I don't have it on here, but my guess is the moving average is very close to this area now, okay? Moving average probably went down and started curling up right here, and then by this point it's moving up. You have all 3 location items. I mean, location items are a big deal with buy setups. So you have all 3 of them here, and a bottoming tail, and a change of color bar in a stock that looks pretty strong. So this is a really tough one because you don't want to see this gap down. Even though it bullied the gap, you don't want to see this type of a gap, okay, in a stock. I would say 50-50 because it's giving you plenty of reasons to take it. But because of the sloppiness on the pullback, you could say, I'm not going to take it. So this one to me would be a really challenging one. And granted, the wide range bar later would be like, yeah, I made the right choice, or I shoulda, woulda, coulda. But when you dissect it, check, 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 there are definitely reasons not to take it, but there are a heck of a lot of reasons to take it. So for me, I don't know if I would add on it, but you could argue. I could see somebody making a very strong argument to add. So this is one of those instances where I'm not giving you a definitive yes or no. I'm telling you I'm not sure. Right? Maybe if I was having a really good day and I'm like, yeah, it doesn't matter if it tags me. And let's be honest, you're not going to lose money on the ad. You're not going to lose money on the ad because your stop loss is going to be below this blue line. So when you look at it in that respect, it's not going to, you might give up some profits, but you're not going to actually lose money. So that could be one more reason to justify taking it. You know what I mean? Yeah, Peter. And again, you're right. The quality of the retracement's not great. So, but 3 location items, like you're going to fight, like the devil and the angel are fighting on each shoulder right now, back and forth. But as the saying goes, when in doubt, it's usually best to stay out. Okay. But again, you already have a lot of money in the bank on this thing. So it is what it is. Okay. Nick, I just told you where I'd put the stop on the ad. The blue line here. Right there on this blue line is where the stop loss on the ad goes. All right. So your cost average would end up being right where the blue line is. And your stop loss would be right where the blue line is. That's why I made the comment. You're not going to lose on it. You're not going to lose money, right? Okay. So we spent some time on this particular chart, which I think we should have. But I think this is a good chart to really dissect because this particular sell setup down here happens way too frequently. You guys ask this question damn near every day on a short or a long play. You have to look to the left and dissect what you saw, and this ties into the bar by bar lecture we did a couple weeks ago. All right, let's move on. All right. Here's another chart you haven't seen before. I lied, there's two. All right, moves up, pulled back, little retest, bounces, puts in a higher low, bounces, chops, chops, chops. Kind of looks like it might want to go higher, and then the bottom comes out. Red bar, red bar, red bar, red bar, boom, green bar. How many times do you guys ask me about this? Oh my goodness gracious. All the time you guys ask me about this. It's under support. You're like, yeah, I know it's under support, Jared, but it's down 5 days. It has to bounce. And that's the comment I get. It's down 5 days. It's down 6 days. It's down 7 days. Quote, it has to bounce. No, it doesn't. It doesn't have to bounce. Okay? Stocks can go down 10, 12, 50. I mean, shoot, the market was just up 13 consecutive days in a row. They don't have to bounce. They don't have to pull back. What am I getting at? Unless you get the criteria, don't take it. And that criteria would be what? Wide range ending bar, huge volume spike, right? And I mean massive volumes, like 5x, 10x volume. Change of color bar, big bottoming tail, okay? So this one is really tough. Most people would look to buy this, and I'm looking at it going, no, this weakness, the power of this move is way too weak to take the first little green bar that you see here. Okay, and it's not quite climactic. I mean, it only dropped from 28.10 to 27.70. It's only a 40-cent drop. Okay, so you look at it. Here's the support area. It breaks the support area. Sellers are clearly in control. Puts in a green bar. You get in, topping tail, and then whap. Nope, not that whap. Okay. Somebody called me prude on YouTube last week for saying that's a nasty song. They did. I kid you not. Anyway. This bounces and then just tags, okay? A lot of you would have taken it. It broke below support and it's not really climactic. Why would you take it here? Because it has to bounce, Jared. No, it doesn't. It's not climactic. I'm going to repeat it one more time. It's not at support and it's not climactic. It's not at support and it's not climactic. Let's say it together. It's not at support. It's not climactic. Why would you take it? Oh, because it's down 4 or 5 bars. It's got to bounce. No, it doesn't. And it likely won't. And it didn't. Okay? It's not at support. It's not climactic. Okay? So, stay away from these. Stay away from these. Like I told you guys before, for it to be truly climactic, you should look at it and literally think to yourself, holy shit, what just happened here? Like, literally look at it and go, damn, whoa, wow. Like, 4-letter words should come to mind as soon as you look at it. That it dropped 40 freaking cents. It's not that big of a deal. $28 stop drops 40 cents. Ooh. And you're thinking because there's 4 red bars, 2 of which are wide range, it's ready to bounce. Okay? It's not worth it. Will some of these bounce? Sure, some of them will bounce. And most of the time, this is a stock that bounces to 27.90 and then fails. This one bounced less than I expected, but this is something that will bounce about 30 to 50% back up, 27.90, something like that, right in there, and then it'll just fail. And then it'll stop out, and you'll go, geez, Jared, you're a genius. But I'm not a genius, okay? Ask my wife, she'll tell you. All right, so let's move on. Now this is one that you guys were in yesterday. Now, no, I'm not throwing people under the bus. Okay, I'm doing it because I commented on this in real time yesterday. All right, so we have Baidu yesterday. And Baidu was a little choppy early on. It pulled back and then it just rips. Like, I mean, wide range green bar and then a topping tail comes in. And this is the area I want to focus on right here. I should have put a circle around it. I apologize. I should have put a circle there. But I blew it up for you. It's in this pink box. Okay, I blew it up. So wide range green bar, big topping tail. Okay, what are these bars saying to us, right? Bottoming tail, bottoming tail. Ooh, then you get a wide range red bar, kind of looks bearish. It engulfs the bottom. Then, boom, this happens. Wide range green bar. Wide range green bar. These are a product of this. See these two green bars? They are a product of what you see to the left over here. Okay? They're a product of what you see to the left. So we already got a little hint here. Wide range green bar, one of the biggest bars of the day. Buyers are starting to step up, or sellers are covering, one of the two. Short people are covering. Bottoming tail, more buyers. Bottoming tail, more buyers. But then this kind of throws a little kink, a little wrench in it, right? You're going, there's a red engulfing bar here taking out the bottoming tail. That's pretty bearish. But there's a bottoming tail here. Buyers stepped up here. What did I tell you guys yesterday? My comment on this was it'll probably pull back 50% and then bounce. Well, I was right for about 6 minutes. Okay? I was right for 6 minutes. Why did it fail? Why was I wrong? Ultimately, why was I wrong? Why wasn't I right that this stock did a 50% retracement and would have ripped, which is what I suggested it was going to do? I suggested, guys, these bottoming tails suggest higher prices, and this thing's going to bounce. Why was I wrong? That's it. Thank you, Volker. Finally, somebody's paying attention, Volker. Thank you. I wasn't wrong. I was right. But the market had a different plan. The market had a different plan. This thing did a 90% retracement back up into this topping tail. This red line right here is equal to this red line right here. And this is the market. This is the SPY. Now, granted, I could have put the Q. It wouldn't have much mattered. Okay, I could have put the Qs. What happened? The market tanked. This stock was actually showing a little bit of relative strength on this bounce to the market. And then the market just said, no, we're going lower. And we're not just going to go a little bit lower. We are going to go lower. $3 lower. That's what happened. The market in the next 30 minutes, 45 minutes went $3 lower. Guys, if the market doesn't do this 1, 2, 3, 4, 5 red bars in a row, Baidu bounces heavy. Guaranteed. Look at the bounce on Baidu over here versus the market. The market went sideways on the bounce. Baidu actually bounced, right? And then the market tanked again. Baidu tanked again. Okay, this actually ended up being a good sell setup. This is probably the best entry on the chart right here. See this topping tail sell setup? Probably the best entry on the chart. But point I'm making is shorting into a wide range bar like this is very difficult to do. This is the point of this slide. Shorting into a wide, you have a bottoming tail right here on a stock that's showing general little bit of strength to the market, a little bit. Bottoming tail with a wide range bar. And that wide range bar happened on some volume. You can see the little volume bar right there. Big volume bar, whatever you want to call it. And you want to short right into that. It's a very challenging thing to do. And if the market doesn't lose its shit, Baidu goes higher. So what's the lesson? Learn what it is you're trading. Meaning, could you maybe get away with this trade if you were very confident the market was going to go lower? Yeah, and that would be maybe an acceptable reason to take it. Maybe. But if you weren't sure if the market was going to go lower, and you're thinking to yourself, the market's going to chop around sideways or go higher, then I probably wouldn't take this trade, right? You have to balance them. So there's a lot of factors you have to look at when you're trading. And a lot of you miss one of those or two of those, and they happen to be the most important factor, like I did last week on the 50 MA. What the heck was that stock? I wasn't looking at it and sitting right on it, right? Netflix today, we thought, maybe we'll get to 1R before we get smacked, okay? It is, Kieran, and it was, all right? And it was. That's a fair assessment, okay? So just be mindful of those things. When you're reading the chart, read the bottoming tail, read the huge green bar. Go, man, that's a tough short. All right. You lost the mic? I don't think so. All right. Okay, next chart. NVIDIA. Somebody asked this question about NVIDIA. And by definition, What do we have? We have a 5-minute 3-bar play, right? This is a topping tail up in here. So you have a wide range bar followed by a narrow range resting bar. The entry is 639.35 and the stop loss is 642.65. Okay? That's it, right? That's the entry. That's the stop. We good? Cool? We're good? Let's just jump right on it. I mean, I have my pre-trade checklist. Wide range igniting bar, breaking support. Oh, it did. It broke this pivot. It broke this pivot. So, yeah, I broke 2 areas of support. Cool, right? Left a topping tail, which is kind of a bonus, right? Narrow range resting bar in the lower 50% of the range. Sweet. It's awesome. Let's take it. Yeah? What do you guys think? Take it? Not take it? What would you do? Now, fortunately for you, you get to see the future, right? But before you took it, you didn't get to see the future. All right, so to try to treat it as if you weren't seeing the future. The answer to this is 2 letters, not 3 letters, which means there's no way you're going to take this. There's just no way. No way you're going to take this. Don't pussyfoot around it and go, well, I'm not sure. I don't really know. What is happening down here? Oh, wait, Jared put it on the chart and the slide for us. Support at 635 to 636. Oh, look, he even pulled up the 15-minute chart to do us one better and put a big pink line across it. Oh, my gosh. So you want to get in at 639 when there's support at 636? Bottoming tail right there? Wow, what a shocker. This thing left a big bottoming tail and bounce, and then another pivot and a bounce, and it pulled back, and then it bounced. My goodness, I can't believe that happened. Why in the world would that happen? I don't know. Oh, that's right. It's at support. So you're taking a stock that in general recently has been incredibly strong, and you're going to short it right into support. And you guys aren't sure about it. That's what scares me even more, that we're talking about this in a lecture. This isn't in the heat of the moment in the chat room where we're trying to find trades and people are like, yo, check this out. We're sitting here calm, cool, and collected, objectively reading this chart after the fact, and you're still not sure? It did exactly what it was supposed to do. It went right down to support, and it bounced, and it retested, and it bounced, and it did it again, and it bounced. And the answer's on the slide too, right? Come on, guys. Now, every trade has expectation. If your goal is to get half of an R or 1 R, maybe you could squeeze this one in. But if you're an all or nothing trader, no way. No way. Support's at 636. You can see it right there. You can see this pink line right there, 636. There's support. That's about 1 R away, give or take. This is like a $3.30 stop, something like that. That's tough. That's tough sledding. Okay? It's tough sledding. Why would you take this? This is a really challenging one. All right? If this stock was weak and wasn't in a stage 2, are you still holding off on this? Matthew. I don't know what your middle name is or your last name is. But if I use the term Matthew, when your name's Matt, it's like when your parent calls you and you're in trouble. Yeah, you're in trouble. Do you make a habit of shorting into support or buying into resistance? I mean, is that something we should generally make a habit of? No. Sure, it could work. Guys, there's always the possibility something works. That's trading. That's life. If there wasn't that possibility, we would never need stop losses, right? I mean, everything would just work. But this is so obvious to me, and I'm kind of curious as to why it's not so obvious to everyone else. There's a lot of support down here. There's a bottoming tail in the 15, and there's a pivot and a retest of the pivot. And the stock bounced every time. Yes, the market may tank and take NVIDIA down with it, and NVIDIA might go to $610. That's possible. But the odds suggest this is not worthy of your money. But that doesn't mean it doesn't work occasionally. Okay? All right. Let's try it again. I'm glad I put 2 of these in here, because this one should be a little easier for you guys. Okay? Should be a little easier. What do we have? We have a 4-bar play on the 15-minute chart. Okay? Wide range red bar, taking out this green bar, doji bar right there. Narrow range resting bar, topping tail, narrow range resting bar. right? All in all, if you're looking in a vacuum, trading in a vacuum, it's actually a pretty nice 4-bar play, right? Everything checks out in terms of the 4-bar play. Unfortunately, well, there's some stuff to the left, okay? Bounce right here, we're on a 15-minute chart. And you know what? Some of you here took this yesterday. You did. And we talked about it. We said it's a beautiful 4-bar play. But it's sitting on support. It has 1 hour worth of room, about $1 worth of room to get to the bottom of support. But remember, support, resistance, it's an area. It could hit at $89. It could hit at $88.50. It could hit at $87.40. We don't know. It's that area. Well, guess what? This ultimately worked. And look how tough the move was. Bottoming tail here, bottoming tail here, bottoming tail here. This stock was trying. People were stepping in, but they were stepping in at lower price points. So if you had taken this at $89 by 90, guess what? It went 3R. So some of you are going to look in here and go, it worked, Jared. Why are you giving us such a hard time? It worked. Because it's not a long-term viable approach to making money. Okay? If you were doing 1R all or nothing, yeah, I still wouldn't do it, Nick, but you're right. Maybe you could somehow, justify taking it, but I still wouldn't do it. So I'm looking at it and just, guys, look, I understand there are days in the market like today where nothing's going on. Like, it's just dead, and you're like, man, come on. So you're tempted to take something like this. You're better off not taking it. You're better off letting it go and leaving it alone. Okay? Efficiency is far more important than the number of trades that you take. Okay? Once in a while, these will work, and it was a really good reason I put it in this lecture, because this one worked. And some of you, and here's the problem, some of you, after the market closes, you'll go back, you'll review your trades, and you'll look at this and go, it's a perfect 4-bar play, and it worked. Check, good trade. Put that in the green folder. No. This is a red folder trade. That means bad trade you shouldn't have taken. Okay? You did a great job on the 4-bar play, but you didn't do a good enough job of the environment looking to the left, finding out where the next area of support or resistance was. Okay? That's interesting, Sylvia. What does that mean? Is that code? So, I wouldn't take this trade, to answer the question. All right? Good trade, bad trade? Bad trade. I wouldn't take it. All right? Now, this, I blew this up. This is an example of a good trade. A gap down with room to go lower. Wide bar, narrow bar, drop. Okay? Good password, though, right? Admin is thinking, what is that too? Who do you bank with again? I'm just kidding. Anyway, wide range bar, narrow range bar, 160 by 162. And this thing went to 133 yesterday. 133 went $27. It went 13.5R. Okay? That's a good trade. Room to go lower, nothing to the left. Boom. All right? Another one. Somebody in the chat room mentioned this yesterday. I didn't. One of you guys did. So you guys do mention really great ideas also. I'm not trying to pick on people for mentioning bad ideas. You guys mention way more good ideas than bad ideas. Well, that's debatable at times. But you do both, okay? What do we have here? I blew it up. Both of these are the same. I blew them up so people could see them. Wide range green bar. So you get a gap down that immediately goes bullish, right? A gap down that immediately goes bullish. Okay? What happens? The next bar completely engulfs this bar. So what do we have? We have a bearish turnaround bar. Right out of the textbook. Bearish turnaround bar. But what's always the problem with turnaround bars? What's the number one issue with turnaround bars? We talk about it all the time. It's the number one issue. Eric, thank you. Klaus, Michael. Wide stop loss. Because it's a wide range bar, it's a super wide stop loss. So you would have had about a $3 or $4 stop loss on this, right? The entry is 90.35, and this area is like 93.50. It's like a $3, a little over a $3 stop loss. Well, I mean, this is a stock that does move, but $3 is a lot. So we got fortunate on this. I say we. I didn't take this trade, so I can't say we. But the person who took this got very fortunate in that the next bar was a narrow range resting bar. So what do we have? A super 3-bar play, as it says up there. So you have a turnaround bar combined with a 3-bar play. You get in at 90.35. You put your stop above the green bar. Not the red bar's high, the green bar's high right here. And it goes on down to about 86 bucks. So it went about $4 on a $1 stop loss. $4 move on a $1 stop loss. Sweet. Because guess what? It wouldn't have worked if you used the $3 stop loss. It would have gone up just over an R, 1.2, 1.3 R, and then just chopped around. You would have ended the day at break even. Okay? This is a beautiful trade. Like, I wish, this is my single most favorite trade of everything we do here at Live Traders. It's just, we don't get them all that frequently, right? We don't get them all that frequently. But this was a beautiful, beautiful, beautiful trade. All right? I just realized I spent way too much time on the charts, and I forgot that we have a second part of the lecture. I'm going to have to go this a little quicker. So, I'm going to do this one a little quicker, but overcoming losing streaks. We've all been there, okay? Everyone has a losing streak, whether it's a 2-trade losing streak or a 20-trade losing streak, which would be pretty extreme. We all get them. So the question is how do we react when they happen, and then what do we do to get out of it? Those are really the two questions, right? What's our reaction during the streak, and how do we overcome it? How do we get out of this slump, so to speak? Okay? So, 1, don't do this. I do it sometimes even now, right? Don't do this. Don't P&L watch. It's bad. Bad, bad, bad news, okay? Don't count money until the money is in your account. It's not a winning trade until you have exited all of your shares at target. How many of you are guilty of this? Where not only do you P&L watch, you're like, come on, baby, come on. You're almost there. Now, it's one thing to kind of look at it and go, come on, let's get going. But how many of you are sitting there counting the money on the way up? You're just counting the money on the way up. And I tell you guys almost every day, guys, we're not at target yet. It's meaningless. It doesn't mean anything until we have exited our position, right? We always have that joke, that superstition in here. Don't talk about the trade until it hits target. We all do it on a certain level, right? We all do it on a certain level. Unmol does it. We all do it, right? Oh, I'm up 2.8 R and it missed target. But don't sit there and count the money as it's going up. Push it aside. Get back to scanning. Take a look at it every few minutes. Scanning is where your money's at, right? Finding new opportunity is where the money's at. So don't be doing that. And trust me, we all do this more during losing streaks. We all do this more frequently during losing streaks. Okay? Because we're like, oh, it's just missed target last time. Maybe this time it'll just hit target, right? So dollar counting, P&L watching, mentally spending the unrealized money while you're in a trade, guys, is going to affect your mindset. It's going to alter your trading decisions, and it's going to take you away from what's important. What's important? The chart. Reading the actual chart. Now remember, not everyone's doing all or nothing. Right? I want to be clear about that. Not everyone's doing all or nothing. So you're allowed to look at the chart. Absolutely. Just don't count the money. If you see reasons to get out and you're not doing all or nothing, then use those reasons to get out. We talked about it last week and the week before with bar by bar. You're allowed to get out of trades that don't look good. Jordan's done a great job of that, if your trading plan allows for it. Now, as a new trader, I wouldn't recommend that because you're going to make an emotional decision and you're going to say it was based off the chart. An experienced trader will actually make a chart-based decision and not base it on emotion. New traders, you give them an inch, they take a mile. So for newer traders, I wouldn't just get out because you think it's not going to work. Back test it first, all right? But don't dollar count. That's number 1. Stop the dollar counting. Even when you're on a winning streak, don't dollar count, okay? Now, why might you be dollar counting? Why might you be P&L watching? Well, maybe you're trading with scared money. Maybe you have a smaller account, okay? Maybe baby needs new shoes. And you're going, oh man, that's the groceries for this week. I'm up $127, and that's what this week's groceries are going to cost. Whatever it is, okay? You're doing the what ifs. What if it hits target? You know what I mean? I can go fix that flat tire in my car. Now, not for everybody, but there are definitely people that come into this business that are tight financially. Things aren't going great. And when they're up on a trade, they're already in their mind going, yeah, I could use that for this. I could use that for that. Scared money don't make no money. Okay? Scared money doesn't make money. All right? So, lack of confidence is a possible reason you're P&L watching, because maybe a lack of knowledge or maybe poor recent performance. Right? So, you lack confidence because you just don't know yet. Right? You don't have the chicken and the egg thing, right? How do you get confidence without winning, and how do you win without confidence, so to speak? How do you win without knowledge? How do you get knowledge? Well, that's okay. That's the reason I tell you guys it's going to take a year or two. The first year, you're going to fight this stuff. And that's what the first year is all about. It's overcoming these things. But just ask yourself, is this a good trade? Even if you get in and it's not looking great, ask yourself, the reason I got in it, does it still exist? Did I follow my checklist when I took the trade? Have that checklist right next to your desk, 6 inches next to your desk, and reread it and go, well, it's a good trade. It meets all my criteria. All right, erase it. Just don't look at it anymore. Okay? Don't look at it. What happens when you lack confidence is what? You start questioning yourself. You don't trust yourself. And you don't believe in yourself, so you're like, yeah, I don't know if I'm going to do the right thing on the next trade. You don't literally, physically, visibly say, I'm not going to do the right thing on the next trade. It happens where you're looking for the trade and you're like, nah, I don't know. And then you pass on a good trade. Or then you take what you think is a good trade, and as soon as you get in it, you start questioning yourself. The second you get in it, you question yourself. Right? So confidence is a big thing. And there's no light switch. Like, I'm not here to tell you, hey, flip that switch and your confidence will be back. It doesn't work like that. Right? So make sure while you're in that losing streak, you're reviewing your trades and you're asking yourself, did I do the right thing? Have somebody else come and help you and look at it and go, yes, you did, no, you didn't. All right? Because, again, when you lose confidence, you don't trust yourself. Okay? So trading too many shares sometimes, trading too much risk is also a product of trading with scared money, trading scared, and those what-ifs turn into some nasty what-ifs, meaning you're up on a trade, it's looking good, and then it turns against you and you lose on it. And now, because of that loss, you're immensely frustrated and infuriated. Well, maybe you're risking too much money. Frustration will happen from time to time, but you shouldn't be that frustrated, right? All right, so first thing you want to do, all right, number one thing, stop trading. Like, literally stop. If you're on a nasty losing streak and you have hit your max loss for the week, the day, the week, the month, stop. That's it. Throw your hands up. Music stops. Say, okay, stop. Something's not right. I have to reevaluate. I'm not going to continue to dig this hole because it's getting too deep. I can't see the sunlight anymore. What do most people do? They keep trading. What do most people do? They overtrade. What do most people do? They increase the risk. What do most people do? Put themselves in such a bad position that it's unrealistic to even get out of it. Stop. Just stop. Just check the ego. And I know it's hard. I know what you're thinking. You're on a losing streak. You're down. And you're like, yeah, but I'm just going to let it go a little past my stop because the last 3 trades stopped me out by 10 cents and they came right back up and they worked. F you, market. I'm going to stay in this one. You're not going to get me again. Fool me once, shame on me. Or shame on you. Fool me twice, shame on me. Right? Nah, not doing that again. Stop. Just stop. All right? Don't let your ego cash checks. Or your body, ego write checks your body can't cash. All right? Take a short break. Pause. Refresh. Clear your mind. Whatever it is you need to do. Have a drink. I don't care what you do. Stop. Okay? Go back. Review your trades. Your tracking spreadsheet in your journal. And if you're not tracking your trades, shame on you. This is a business. If you're not tracking them, shame on you. All right? What do you see? Are you seeing something clear where you're going, I see myself making the same mistake, like taking 3-bar plays into support, like the last 2 slides. Or maybe you're not seeing anything. In that case, like a doctor, get a second opinion, right? Get a second opinion. Have somebody look at it. Have a trader look at it. Have an accountability partner look at it. Go, man, I've gone through these, this way, that way, this, every way possible, and I don't see what I'm doing wrong. Go get some help. And then, What mistakes are you making? Why are you making those mistakes? What do you think is causing you to make? Is it lack of knowledge that's causing those mistakes? Is maybe you're trading too stressed out. Maybe a family member passed away. Maybe you're sick. Maybe you lost your job. I don't know. Maybe there's something in your life that's causing you to be overtly stressed. Step back. Go, you know what? I'm costing myself money by not trading with a clear mind. Okay? Then, when you finally refresh your brain, your mind, clear your mind, you figure out what you're doing wrong. And again, this might take some outside help. Okay? This might take some outside help, and that's okay. Don't be embarrassed. We all have losing streaks. I do it in front of you guys, so I don't have anybody to cry to. You see it. Okay? Then you're going to start every day after that with some type of positive affirmation. What your goals are that day, what your routine is, what your checklist is. And every day you're going to start with that. Okay, you're going to go in with a positive mindset. Now, some days it's going to turn to shit in a hurry, and that's okay. It's part of it. All right, every day you wake up, the sun shines. Every once in a while, it turns to shit in a hurry. Oh, well. Go back to paper trading the first few days you come back, first 1 to 5 days after you've stopped, reevaluate. After you've stopped, taken your break, reevaluated, got your positive affirmations, you're going to paper trade for a couple days. Depending on how bad your losing streak was, you got to get proved that you can actually do what you said you're going to do. Okay? And then, of course, never take a trade without referencing your checklist. Review the course, check with a trading buddy, get coaching, do whatever it is that you need to do. Take it slow. One of the preponderance that people have, and we all do this, is, man, I just lost 9R, whatever it is. Say I lost 9R over 2 weeks. It's the first thing you're thinking. How can I get my money back? And then you're thinking, well, if I cut my risk down, it's going to take me longer to get my 9. Stop thinking about the 9R you lost and think about proper trading. I'm going to repeat that part. Stop thinking about the money you already lost. It's gone. You're not getting it back. That's gone. You can only focus going forward. Maybe it takes you a week to get that money back. Maybe it takes you a month. Maybe it takes you 2 months. But your goal is proper trading. That's it. Okay? If you don't have process goals, right, Braden, the outcome will never happen. Outcome goals are just a pipe dream without process goals. Okay? Hold on. We're getting there. At the end of the day, guys, I'm just paraphrasing this whole thing. At the end of the day, you're going to have to do this. I can't do it for you. I can give you advice all day, every day. I can. I can sit here and talk to you till you're blue in the face, motivate you, build your confidence. But you're the one that's got to push that mouse button. You're the one that's got to push that hotkey. I cannot do it for you. What does that mean? You're going to have to own it. You're going to have to step up, right? Taking a trade prior to, taking a trading. There we go. Sorry about that. I'm sitting here reading it like, what? Taking a trade, guys, prior to gaining information needed out of fear of missing the trade. Impulse trades. Big reason for bad trades. Selling out of fear that prices are going to move against you rather than prices rising. That negativity, that fear of loss. We're not objectively reading the chart. The chart doesn't know you. It just is, man. The chart doesn't care about you, which is a good thing. You don't want it to care about you. Okay? Have the patience and discipline to apply these techniques. That's going to be your number one challenge. And it's going to be ridiculously frustrating sometimes. There's no other way to say it. I haven't met a trader that's not gone through this. That's not gone through that roller coaster of frustration. The highs and the lows. Man, I made 20R this month. I lost 17 next month. Are you kidding me? I thought I was just getting it. You were, and you probably are. But there's going to be still a few roadblocks, speed bumps along the way. Okay? But if you have any hope of succeeding, you're going to have to master your emotions on a certain level. You're going to have to park the ego in the closet and overcome that fear of loss. If you don't, this is not the business for you. That's it. It's just a game of odds. Believe it. If not, find something else to do. So my point I'm getting at is a lot of times when you do a psychology lecture or an overcoming losing streaks lecture, people just think that Jared's going to come in, he's going to give me a massage, the light switch is going to flick, bam. The heavens will open, and you're just magically going to be a 20, 30 hour a month trader. It doesn't work that way. This is hard work. You're going to be told the same thing over and over and over again. The question is, are you doing it? Are you applying it? Okay? And that's the challenge of trading. That's the $64,000 challenge. Can you overcome these things? Well, some of you will and many of you won't, because you won't put in the time necessary. And that's the rub right there, that last part, the time. Some of you will get this and you'll be able to overcome some of these setbacks in, say, 3 to 6 months. Some of you will take 3 to 6 years. And some of you will quit in between going, I'm not, it's just not worth it. And that's the rub. No one can tell you how long it will take to be a great trader. I tell people 1 to 3 years. If you don't have at least 1 or 2 years, don't even start this business, because this will happen to you. It's 100% it will happen to you. Okay? So, summary. The goal? Be a robot. We're not, but that's the goal. Okay? Focus on dollars. Once in a position, it's a trap. It leads to failure. Don't do it. Do not dollar count. Do not P&L look, watch, read, whatever you want to call it. You can glance at it. Just don't do it too often. Okay? Planning each trade before you take it. I know, common sense type stuff, but we all know it's a superpower. This will allow you to set and know your maximum loss. Guys, once you've accepted your maximum loss, which is the next one here, once you're in a trade, that's it, man. That's it. You're losing that money. If it doesn't work, it's gone. Forget about it. You've written it off. Okay? If it works, great. You get a lot of money. If it doesn't work, you lose whatever you predetermined. Okay? If you can't accept the loss, decrease your share size or just don't take the trade. They're the only two options. I'll repeat that. If you cannot mentally handle the loss, either take fewer shares, lower your risk, or just don't take it. You're not ready. You're not mentally ready yet. Okay? The only thing you really need to focus on after you get into a trade is the chart and the market environment. That's it. And if you're doing all or nothing, you don't even need to focus on that. Honestly, if you're doing all or nothing, the only thing you need to focus on after you enter a trade is finding another trade. I'll repeat it. If you're doing all or nothing, the only thing you need to focus on after entry is finding another trade. Otherwise, you're not doing anything. If you do manage in between, you're not doing all or nothing, then just look at the chart. See what the chart's telling you. Topping tail, bottoming tail, whatever. Okay. The goal is robotic indifference. All your emotions should be taken out of the decision-making process. You know what the rules are. You know what your checklist says. How closely are you going to follow it? Are you either going to follow the rules or you're not going to follow the rules? You're either going to be a successful trader or you're not. Okay? It's not the market's fault if you fail. You know that, right? There's somebody out there making millions of dollars right now. Why are they making it and you're not? It's not the market's fault. It's your fault. And that's the hardest part, right? That's why it's so hard to say, I'm sorry, right? Admit it. When you get into an argument or a fight, what are you really arguing about? Let's be honest. What are you really arguing about? Give it to me. It's a one-word answer. What are you really arguing about most of the time? Give it to me. One-word answer. Thank you. That's it. When you get into an argument, it's really just about ego. Now, every once in a while, there is a method or a purpose to our arguments, but it's really my ego. You're like, shoot, my hand's in the cookie jar. I can't admit I was wrong because, well, it hurts to admit I was wrong because I like myself and I don't want to admit I was wrong. Ego, ego, ego. Well, I use that analogy because that's exactly what traders do. Well, if I don't sell it, then technically I wasn't wrong. Because until I realize the loss, I'm actually not wrong. No, you were wrong because it's past your stop loss and you said you'd get out there. That was your area that you said, I will admit I was wrong and leave the trade. But you're still in it somehow. It's ego. Egos are expensive, man. Right? Why do some people go to court and then fight it out instead of settling? They fight it and fight it and fight it, and the money's not even worth it. Ego. It's principle. Just the principle. And sometimes maybe that is worth it, maybe. But in trading, it's never worth it. Your ego is an expensive thing. Don't listen to it. Okay? Listen to the chart. Listen to your trading plan. That's what's going to keep you on the straight and narrow. That's what's going to help get you out of losing streaks. It's just a matter of time. If you do everything we just talked about, it's just a matter of time. I hope you guys learned a little bit about charts in terms of what you should and shouldn't be doing, where you shouldn't be shorting, where you shouldn't be buying, as well as how to stay out of some losing trades, the mental gymnastics that we play with ourselves. So check that ego at the door. It does you no good. No good. Zero. There's nothing good about having a big ego in trading. All right? So I'm Jared Wesley of Live Traders. We'll get back at it again next week.